The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
It's Monday morning, everybody. I hope you had a restful weekend. Welcome to Squawk Box Europe. I'm Steve Sedgwick with Karen Cho and Ben Boulos. And these are your headlines. Commodities continue to fall aggressively. Gold and silver prices extending big losses from last week after their worst one-day declines since 1980 on Friday, as investors gauge the impact of Kevin Warsh's nomination as Fed chair. Oil prices also easing back from multi-month highs as US President Donald Trump dials back threats against Iran, telling reporters the regime is in serious talks with Washington.
We have the biggest, most powerful ships in the world over there, very close, a couple of days, and hopefully we'll make a deal.
Asian equity markets are deep in the red, with the KOSPI leading losses and triggering a brief trading halt. Futures in Europe and the US also poised for further selling.
And the US government enters a partial shutdown despite a last-ditch funding deal in the Senate. Speaker Mike Johnson promising a House vote by tomorrow amid political splits over the Trump administration's immigration enforcement tactics.
A very good morning to you. Good morning, Karen.
Good morning.
And good morning, Ben.
Yeah,
nice to see you. Ben's
Welcome,
joining
Ben.
us now, and it's lovely to see you. Thank
Lovely
you
to
very
be
much.
here.
Well,
Thank you.
good. You'll see if you say that in 3 hours' time. Look, it's very exciting at the moment. There's a lot going on. I have been mildly obsessed all weekend with looking at silver and Bitcoin and Kevin Warsh, and we're all Kevin Warsh experts now.
We are,
I'll be brutally
absolutely.
honest. 72 hours ago, I knew very little about the man. I know a lot of people can say, oh yeah, I always knew that he was an inflation hawk and he wanted I didn't know that. I didn't know about what he wanted the balance sheet. I'm holding my hands up. Now I think I know a little bit more, but the markets are digesting and it's very, very exciting seeing what else is going on. Plus there's a lot else going on as well. And I think we need to be very careful to disseminate all the little different factors rather than say it's all because of.
Yeah, and was the sell-off in gold and silver down to Kevin Warsh, or was it something else? Was it just a trigger for something else, or the froth we've been talking about? And I think today we need to cast our lens a little bit wider and take a look at what's happening in the South Korean market, because it suggests froth is coming out of the market, not just around gold and silver, but around one of the markets was actually the best traded market last year. It was up 75%. So it feels as though someone has stepped on a landmine in the last 3 days, and we now have some froth coming out of the market.
That's interesting about the impact of the emergence of Kevin Warsh as the pick for the Fed chair on what we were talking about previously, the Sell America trade, and whether that kind of halts that for a period, perhaps a renewed appetite for the dollar, people fears about the independence of the Fed kind of drifting into the background.
There's a lot to discuss, and luckily we get 15 hours a week to discuss it as well. So
I think about to say 15 hours a day. I was going to say that's not what they told me.
you're welcome to do 15 hours, although the anchor union will be on your back if you try and do that much. And don't do any extra work without squaring it with Karen and I. We don't like it when colleagues do too much work. It gives us a bad rap. Just so you know. Okay. Precious metals, lovely to see you. Precious metals are accelerating losses following Friday's historic sell-off as a firmer US dollar and profit-taking pull momentum from a recent run-up in prices. By the way, you've got to mention margins. One has to mention margins. The margin requirements have gone up aggressively, and that means that people have less money to spend and less leverage available, just so you know that. Friday's declines saw gold and silver post their worst day since 1980. US President Donald Trump's pick for the next Fed chair, Kevin Warsh, also led to traders scaling back optimism on future easing. Crude prices are sharply lower. For a different reason, though. This is after US President Donald Trump appeared to signal a de-escalation in tensions with Iran, saying Tehran is seriously talking. The US leader has repeatedly threatened intervention if Iran does not reach a nuclear deal or continues a deadly crackdown on protesters. Oil prices had risen to a 6-month high amid fears of a US strike on the country. The president responded to suggestions from Iran's supreme leader that strikes could lead to an all-out war.
Why wouldn't he say that? Of course you're going to say that, but we have the biggest, most powerful ships in the world over there, very close, a couple of days, and hopefully we'll make a deal. If we don't make a deal, then and we'll find out whether or not he was right.
Hey, Dan, it's really lovely to see you, Dan. Really fascinating, isn't it? Because everyone's saying, commodities are all down because the dollar's firming, of course, but the commodities on the pressure side are moving for a different reason from the commodities in your world, the oil markets. Tell us more about it.
It's a good point, Steve. I think the USD is probably just one factor in what is quite an aggressive crude tumble that we are seeing unfold right now. Just take a look at the price action. You can see WTI down by around 5% as we speak. Brent also caught up in the crosshairs here, and indeed off the lows of its own trading session. Well, we were down quite significantly through the course of Asia trade, but what we see right now is crude, of course, pulling back on the suggestion that the president may be angling for a more diplomatic approach when it comes to the regional crisis surrounding Iran. Of course, the suggestion that we could see direct US or even Israeli strikes inside Iran had pushed up the crude oil geopolitical risk premium over the past couple of trading sessions. We are now seeing that starting to fade, with the president suggesting that he is still considering his options when it comes to Iran, and regional allies here also suggesting that perhaps a more diplomatic approach would be the best way forward. We saw a flurry of diplomacy taking place at the weekend. Axios reporting that senior Iranian officials were meeting with not just officials in Egypt and Qatar and Turkey, but also holding indirect conversations with the United States, ultimately suggesting that a framework for negotiations may now be beginning to emerge. And of course, there is a real debate about what the United States could potentially do next here. On the one hand, allies of the president say because of the US military power that has now moved into the Gulf, in particular the USS Abraham Lincoln off the coast of Iran, there is a view that if the president didn't strike, then he would lose credibility and it would mean that the regime could be emboldened. But then, of course, you have other regional allies like Saudi Arabia, which say peace and prosperity is the president's endgame here, and striking Iran could have more wider reaching consequences to the downside for regional stability. So obvious concerns about where this is going and what happens next.
Yeah, but Dan, you would have been watching something else as well as the Iran-US situation, and you were watching OPEC Plus and what they've been up to as well. And I thought it was quite fascinating, although expected, that they continue to maintain their production freeze. If they really were concerned about these oil markets getting out of hand, or were concerned about the geopolitics, or were concerned actually that demand was outpacing supply, surely they would have increased their production.
Indeed, and OPEC met at the weekend. On any other time in the markets, that would have been a top story. But instead, what we saw was OPEC deciding to hold the line here and actually stay true to what they've been saying over the last couple of weeks about this upcoming meeting. That is, no production change required and remaining on pause until the end of Q1 when it comes to its own supply endgame here. No real surprises there, and the market's not necessarily reacting to those headlines either. The bigger question around the OPEC Plus conversation now is exactly what happens after March and how much of this geopolitical conversation, particularly around Iran, is factoring into their decision making at this point. The prevailing consensus is that 2026 is going to be a story of additional supply. Of course, the word glut has come up and up over the last couple of weeks and indeed months. So how OPEC navigates that into the future will be very closely watched, but it seems as if they're keeping calm and carrying on, at least for now.
Dan, thank you very much for that. Let me just bookend the conversation around commodities with what's happening in the Asian markets today. We had a better hand when it came to the factory activity numbers across the region, suggesting that maybe some of the tariff threats into the tail end of last year may be abating. So positive data and numbers today, but not impacting the Asian markets to the upside. In fact, some of the selling that we've seen on the commodity markets, from gold, silver to copper, catching up with the Asian markets too. And the one that's been particularly concerning has been the South Korean market. And that was the market that was the best performer last year. Again, it continued its run this year thanks to some of those big AI plays, the likes of SK Hynix and Samsung. But you can see the market down heavily today. So the selling that we've seen in quarters of the commodities market spinning across to Asia today, which should be supported thanks to the PMI numbers, and that is simply not happening. The Japanese stock market trading weaker as well. Some of the early positivity around the weakness in the Japanese yen that has been counteracted by concerns around the AI story. What's been cited today has been questions lingering over Nvidia's original investment in OpenAI, whether that has consequences too for some of the AI, the tech plays in the Japanese stock market. But across the board, you can see a retreat, and also for Hong Kong and Shanghai stocks. Now, pushing on to Europe and how we're setting up for the trading session, just what sort of pullback are we anticipating? It looks like it's to the 1% tune for the Xetra DAX. Don't forget, as we wrapped up the trade Friday, we were in positive territory, very modest gains across the board on the benchmark, the Stock 600, on the FTSE 100 up about 0.5%, and actually a stronger turn for the Xetra DAX up 0.9 to close out the trading week. So we're looking to give back all of that territory plus some at the start of this session. Well, US futures, as we gear up for the trade for Monday, again, it looks like there's a bit of volatility to weather later on Wall Street. 1% anticipated to come off the S&P 500, a little bit more when it comes to the NASDAQ. So it does feel as though there are some fears percolating around some of the hotter trades that we've had in recent weeks and months. Ben.
We'll keep the focus in the United States. The US has entered a partial government shutdown. This is despite the Senate backing a deal. The Senate package would fund most agencies until September, but includes only 2 weeks of funding for the Department of Homeland Security. Democrats are pushing for changes to the Trump administration's immigration enforcement tactics following the killings of 2 protesters in Minnesota in recent weeks. House Speaker Mike Johnson says he expects to pass the funding package by Tuesday after House Democratic leaders did not commit to providing the votes needed to reopen the government under a fast-track process in the chamber.
President Trump confirmed Kevin Warsh as his pick for Fed chair on Friday. You all know that by now. After a months-long selection process, Warsh has been a vocal critic of the central bank, pushing for action to shrink its balance sheet. It is that line, ladies and gentlemen, that I think is the biggest ruction and the biggest surprise for all of you out there as well. The fact you've got a man who will basically potentially, if he can, over the medium to longer term, shrink the balance sheet. What does that mean for risk assets? What does it mean for longer end of the sovereign market? I think it means a lot. Saying officials have been too data dependent and criticising the use of forward guidance. Last year, Warsh called for a regime change at the Federal Reserve beyond a new chair, saying, quote, it's about breaking some heads. Wow. Fed Governor Stephen Mirren told CNBC he expects Warsh to be able to win policymakers over.
I think they're going to receive him well. I mean, he's a very well-respected guy. He's been at the Fed before. You know, he was a governor. You know, he was a governor at the Fed under the Bernanke Fed. He's had a long history of convincing people about his arguments, and so I think as a result, he's going to be treated with a lot of respect. And you know, I think people are going to find him very persuasive because at the end of the day, I think a lot of his views are really right.
So many questions for Charles-Henri Monchard, who is the CEO at Seize Group as well. Charles-Henri, let's just start off with some of the obvious stuff that's gone around. Trump has picked Warsh as his pick, and certain risk assets, I say certain ones because not everybody, have sold off stunningly aggressively at the same time. Now, whether they were the touch paper or whether actually there's a direct correlation remains to be seen. But what are you calling about what's going on in the market at the moment? Good morning, sir.
Good morning. Yes, well, what is interesting is that all of this is happening last day of the month. And remember what was January about. It was about the Fed is losing its independence. The Fed will continue to print money, cut rates, liquidity awash. The dollar should continue to decline. And that led to one big trade, which was long commodities, long precious metals, long value, long emerging market, and so on. All of this obviously being leveraged. And then, as you rightly pointed out, we got this surprise because at the end, he was not the front runner. And then we indeed started to look closely about Mr. Warsh, the fact that he's a kind of hawkish dove. In the past, he had some hawkish thoughts. Yes, he wants to cut rates, but also, very importantly, he is in favor of reducing the size of the Fed balance sheet. And as we all know, markets are addicted to liquidity. And currently, this is the big stress. And also, there are a lot of uncertainties in terms of timing. He needs to be elected as one of the Fed member. then he needs to be elected as the Fed chair. There is also the question mark about Mr. Powell staying on the board or not, Department of Justice. So a lot of uncertainties, and markets don't like uncertainties.
I honestly believe the four of us could talk about this for hours. I'm genuinely spent all weekend just looking at commodities. But do you think, here's my last question for you this morning. Do you think the sell-off we've seen in silver, gold, other more volatile risk assets, and I'll put Bitcoin in there as well, do you think it has ramifications for the main markets, for the equity markets, for the more risk-on assets? Because I think a lot of people want to know that answer today.
Yeah, well, you mentioned commodities, especially silver. It was obviously also connected to a lot of excess in terms of leverage. And at the time of margin requirements being increased, there was also the China ramification. All of this silver trade was packaged into a fund which was frozen. These funds were frozen on Friday, and that created some forced selling and so on. So I think this one was the most extreme leverage. I think that one of the reasons why the market is pulling back, and it's not just commodities, also equity markets, is the fact, again, that the market is looking very closely at its Fed balance sheets. To me, here, the misunderstanding is that it's not about reducing liquidity. It's moving the buying of US Treasuries from the Feds to the private markets, i.e. the banks, through deregulation. And the reason why we might be going through a period of volatility is that the timing of this is very uncertain. So markets prefer to have the certainty of the Fed buying treasuries than the uncertainty of the buying of treasuries moving from the Fed to the private sector, i.e. the banks.
Charles-Henri, there's been a lot of reporting about what went wrong, why we had the extraordinary moves in gold and silver to the upside, and then the extraordinary moves to the downside stretching across to commodities. But this morning, as we take a look at the South Korean market as well, it feels like it's all coming together. That is a story of excess leverage froth coming out of the market. And to your point around Warsh, Kevin Warsh, it feels as though the market now has a narrative. This is a man that wants to shrink the balance sheet, has been concerned about that bloated balance sheet causing financial excess elsewhere in the market. Is this the reason we are seeing some of these assets sell off so aggressively? It is just a letting out of the air moment that the market is now looking at this Fed chair and they're taking the leadership from Warsh.
Well, you mentioned Korea, which is interesting because Korea was part of the momentum trade. So I mentioned the fact that there is a sell-off in anything which was leverage, in anything which was related to the fact that the market got addicted to this long liquidity move. And I think what is happening in Korea was somewhat linked to that because it's a momentum trade. Now, when it comes coming back to Kevin Warsh, I think what would be key for the market is digest the fact that, yes, there is a willingness to shift monetary policy, but also fiscal policy, because they want to move from a demand-led stimulus to something which is more supply-related. But again, nothing is done yet. He will be hopefully the Fed chair, but that doesn't mean that he will have the majority. For the time being, there are still 4 against 3 when it comes to the, let's say, Trump-related push on the Fed. So there is a big question mark. And markets also remember that each time there was a change at the Fed chair, there was a 15% drawdown on average, for the market because of all of these uncertainties. So I think it's again the same thing, is that there is a change, there might be a new agenda, and the market wants to know more and will test this new Fed chair.
Indeed, and trying to get any forward guidance with that sort of setup is going to be fascinating. I know the market is looking for Warsh to bring some forward guidance, but given the makeup you've just mentioned at the Fed, that could be incredibly difficult. But today I want to ask you whether we should be concerned about other risk on assets, and namely in tech stocks. If you look at what happened on the Nikkei today as well, should we be concerned that some of the froth will come out of this end of the market, given what we're already seeing in other quarters, from the gold to the copper to the South Korean market story?
Well, let's come back to the fundamentals. We are in the middle of the earnings season. And by the way, earnings growth in the US is quite good, beating expectations. But there is one segment of the market which is still under pressure, the Max 7. And we saw last week, again, the market is quite worried about all of these CapEx plans. the market is worried that all of this money will not generate, the return on investments which are currently expected. And this is why we have this Max 7 being on the negative side in January. But for the rest of tech, if you look at tech equal weight, actually, it has been doing okay-ish with the exception of software. But now, because of this reversal of the momentum trade, indeed, some of the darling of January, including, for instance, memory chips in Korea, are under pressure. But generally speaking, when it comes to tech, when it comes to earnings, the fundamentals remains rather decent.
Charles, just to pick up on the Kevin Warsh story once again, just taking a step back, we've learned that he has this desire to shrink the Fed's balance sheet. But if I were an institution looking at past history and what went on during the pandemic and before that the global financial crisis, a lot of the damage was limited by the Fed's willingness to step in and buy up debt and pump money into the system. If he is averse to that, do you think there's a feeling that in a future crisis or future turmoil, the Fed may not step in the way that it has done if he is confirmed as the next chair?
Yeah, it's a very valid point, and it's probably the fear of the market currently. But 2 points on this. One, again, is privatization of the US Treasury buying. So through financial deregulation, let's say pushing the banks to be the buyers of kind of last resort on US Treasuries, point number one. And point number two, I think we need also to keep in mind, because before we were saying that we all try to understand who is Kevin Warsh over the weekends. If you look at 2008 great financial crisis, actually, it was quite flexible. He changed his mind. Initially, he was, in the camp of rising rates, and then he changed his mind. So I think he's also a pragmatic guy, a pragmatic Fed chair, and probably the markets will learn the lesson on this. He also needs to work very closely with Scott Bessent. So their, let's say, teamwork will be very important here.
Okay. Charles-Henri Monchot, thank you very much for your analysis there and for joining us this morning. Thank you for joining us as well. Stay with us. Coming up on the show, crypto slumps, Bitcoin sinking towards another key milestone level. Plus, we look ahead to a big week for global earnings, headlined by Alphabet, no less, in the United States. And we'll get a check on the outlook for Germany with KfW CEO Stefan Wintels. That conversation coming up at 7:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
UK Prime Minister Sir Keir Starmer wants to establish closer defence ties with the European Union. It comes after talks on UK access to the Security Action for Europe loan programme failed last year. Speaking on his trip to China, Starmer said he hopes to make progress on spending, capability and cooperation. Geopolitical tensions and supply chain concerns are in focus as industry leaders gather for the Singapore Air Show, which kicks off tomorrow. Speaking to CNBC, IATA chief Willie Walsh criticised US President Donald Trump's threats of tariffs on Canada if it does not certify certain US-designed aircraft, saying it is not right for politics to be involved in such a critical issue. Monica joins us live from Singapore now. Monica, we know that Trump has picked a number of fights with Canada. The latest is over aircraft, so just walk us through the latest here.
That's right. Good morning. So coming to you live today from Singapore at the Changi Aviation Summit. Now, this is a summit. It's a one-day event preceding the big air show in Singapore that starts tomorrow, will last the rest of the week. And today, a lot of politicians sitting down with heads of IATA and ICAO and airport CEOs to talk about these challenges. Now, when we talk about geopolitics, we also heard from ICAO president. He just has started his new tenure. This is Mr. Toshiaki Onuma. He's just started as of January. He said economic threats that, like what we saw coming from U.S. President Donald Trump, simply not only do they not have a place, but they threaten public safety. Certification is a safety issue. But Willie Walsh also talking about how geopolitics has played into the industry here just 1 month into 2026. I asked him if he's feeling a little less secure than he did at the outset of the year. Here's what he said.
I think you've got to give credit to airlines in the way they've been able to respond to this changing geopolitical environment. I mentioned this morning the way the industry has been able to move capacity quickly to respond to demands for air cargo, where we saw a decline in air cargo shipments from Asia into North America, but a very significant increase in air cargo from Asia into Europe. And that's something that I think the industry has adapted to very well, moving capacity quickly rather than waiting for things to return to the way they were. So without question, it's going to play on the industry this year, but to some degree, we've got used to dealing with these geopolitical challenges and we respond pretty well to them.
And with air cargo, we saw record numbers last year. And like you said, it was an extremely challenging year. Airlines were able to respond. Do you think this year we'll see as big of a growth, or are we going to hit more of a stabilization?
No, I think we'll grow, but at a slower rate. So last year, the growth was around 3.4%, which was significantly higher than what we had expected. Originally we were looking at slightly positive, 0.7% growth. This year we're projecting growth in the order of 2.4%, which is still quite healthy. And we're also projecting cargo yields to decline slightly, only by about 1%. So I think the outlook for air cargo continues to be positive in 2026.
Now, growth here, another discussion of the day. The industry looking at it as both an opportunity and a challenge. This Willie Walsh saying, well, he'd always prefer to talk about growth rather than go back to those conversations he was having during the pandemic. But he is concerned about investment and global coordination with air traffic controllers. And this is especially true as airlines and those controllers have to learn to share airspace with the new technology coming on board. That's everything from drones to air taxis.